Well, it was an interesting start to the week on Wall Street. We saw the Russell 2000 close higher today, but on the flip side, we saw the NASDAQ composite down by over 1.6%. A lot of that was due to antitrust concerns regarding some of the big internet players out there like Google and Facebook and Amazon. We also saw some of the big payment providers out there like MasterCard and Visa and PayPal and Square take a hit today. The NASDAQ did end up having an oversold cluster signal yet again. On the flip side, we saw some gold stocks doing well. We also saw some insurance stocks doing well. So we're going to take a look at all of that, see what it means. We're also going to take a look at a trade application in the financial space that's hitting an all-time high here today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 3rd, 2019. First of all, if you're new, welcome aboard. Go to our YouTube channel, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list, so that way you can see what stocks are giving you overbought and oversold cluster signals in the S&P 500. We also have a big presence on Twitter. Make sure you're following me there at Brandon Van Zee. And make sure you click like and retweet on these Market Outlook related posts that we typically will pin to the top of our timeline if you get value out of these daily videos. Also, we have a presence on Facebook. Feel free to check out our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the analysis. As you can see, I've got chart 4B pulled up here in front of us. Real quick, I did get an email about this. Some folks that download this chart setup and they have a really small screen size, the way that Thinkorswim does it is they will probably not show you the bottom indicator just so that they can kind of readjust all of the charts so that way you can see something on your screen. So if that has ever happened to those of you that are premium market scholars, you've gone through our tutorial to import all of our charts, and then all of a sudden you're looking at this foregrid and the market outlook the market forecast indicator at the bottom is missing. What you might need to do is right click on the chart and then go to maximize sell, and then it should show up down below. There's nothing we can do about that. That's just Thinkorswim's way of trying to conserve space there. So I know that will not affect about 85% of you because most of you are looking at this on a desktop computer. But for those of you that do have smaller, let's say a laptop or another tablet sized of a screen, that very well might affect you. So again, just right click on one of the charts, go to maximize sell, and then you will be able to see all of the indicators listed down below. All right, so with that out of the way, let's take a look at what happened in the stock market today. I mentioned the Russell 2000 was up today. It was up 0.31%. Remember that the prior 2 days we had received those oversold cluster signals, so perhaps maybe it's a chance to a little bit of a reversion to the mean type of a move higher. We'll see where it takes us. But the real story today was right over here, the NASDAQ composite. Notice the NASDAQ was down 1.61% today. That was a really nasty day. And you can see that we put in another cluster. Now notice here this low label is kind of blocking the view of that green dot up here. So it might not be abundantly clear up here, but you can see it down below. And again, if you right click on that chart and then go to maximize sell, notice down below, you should be able to see both of these two little dots right down here for the last 2 days of clusters, and you can also see them up here. On the prior view, this low tag was blocking the view of that. You can also go up into your settings area. It's just this little gear icon, and then you could probably take off the show high low bubbles right there, and then that low bubble would disappear. So a couple of ways around that, but just wanted to make sure that you were aware that indeed we did have an oversold cluster signal again today on the NASDAQ, despite relative calm across most of the other indices. And a big reason behind that, as I mentioned in the intro, were stocks like Google. Here's Google. It was down over 6% today, falling off of a cliff. We had stocks like Facebook. Look at that nasty candle over to the right-hand side here, down 7.5% on Facebook. We saw Microsoft get hit today as well, down 3% there. We saw Amazon take a beating. It was down 4.6%. And then some of those payment technology companies caught my eye as well. They had largely been stalwarts in the market recently. So, you know, a stock like Visa was down fairly substantially today. There's MasterCard down quite a bit, and then there's PayPal as well. So, most of those are kind of NASDAQ related names, and a lot of them took a really big hit here today off of various concerns. But for those big communications stocks or the big internet related ones like Google and Facebook, those were largely based off of some rumors floating around that regulators were going to start cracking down and maybe make them change their ways, because a lot of people feel like they've got some monopolistic tendencies to their organization. So we'll see where that takes us, but certainly a lot of broken down charts there off of some very popular, well-known large cap types of stocks. Otherwise, if you look at some of these other indices here, you'll notice the S&P 500 was down today, but it was only down 0.28%, and the Dow was up just a hair here today. Notice that all of the indices continue to have a bearish posture. So as we take a look at our next setup, this will be chart 4C here. And as you're looking at this, notice that we do have 3 red arrows across the board on chart 4C, and we can tell that very quickly by just looking at the background colors of our charts right here. And notice that all of them do have 3 red arrows because if you look as just an example on the S&P 500, we've got our first red arrow on the moving average, which actually occurred way back at the beginning of May. We have a red arrow on the MACD histogram, which occurred way back again at the beginning of May, and then we've had a more recent phantom red arrow there on the stochastics that occurred on May 23rd. So basically, since May 23rd, we've kind of completed that 3 red arrows on the S&P 500 and on most of the other indices there as well. So yet another kind of bearish sign. I don't think you need me to tell you that. If you've been paying attention to the stock market for the last 6 weeks, you'll know that across the board we've had really ugly trading, and we've had bearish postures more times than not if you've been watching these videos along the way. So that continues to be the case. The question now is whether we get any sort of a snapback rally in the near term. And while today we saw a little bit of effort from the Russell 2000, we didn't see much of an effort from the other indices to revert back to the mean. So we're going to keep our eye on that story going forward. Let's go ahead and take a look now at chart 4D. This will be our 1040 crossover method chart here. And as I mentioned to you guys last week, we do have a bearish crossover now on the Russell 2000. So that is new news. And remember, that's not very typical for us to have new news on this particular chart setup, which is chart 4D here, because remember, this is a very slow moving kind of strategy that you're looking at here. The 1040 crossover method that you hear David and I refer to is the 10-week moving average versus the 40-week moving average. The 10-week moving average on each of these charts is represented by the orange line. The 40-week moving average is represented by the blue line. And we're looking for those moving averages to cross over one another themselves. And so if I were to right-click on this chart and go to Maximize Sell, you can kind of see how that has taken place here, where this orange line is now crossed below this blue line on that Russell 2000 chart. You can also see down below the MACD 2 lines, the black line is coming down below that kind of pink horizontal line there. So we have officially confirmed a death cross in the Russell 2000 here, which is the small cap index. We do not have death crosses in the other 3 major indices. You can see we still have some separation there with the Dow Jones, the S&P 500, and even the NASDAQ composite. So while all of them have price trading below their moving averages, the moving averages themselves have not crossed yet. So there is a chance for them to kind of pull themselves out of this, what seems to be downward spiral here in the next few weeks and months, and they don't necessarily have to have death crosses by the time it's all said and done. If that does occur, of course, David and I will be the first to let you know about that. Let's go ahead and take a look at chart 4E now. And this will be our 12 grid, and this is our first set of 12 grids is our inner market analysis 12 grid. And the background colors of the charts will tell you whether we have a bullish or bearish posture on each of these securities from an intermediate time perspective. And so, the intermediate line on the market forecast indicator is the green line, if you've looked at that before. And so if we have a green background color of these charts, they mean they have bullish postures. Pink background mean bearish postures. As I mentioned in the intro, one thing that really caught my eye here today is what's going on with gold. Holy mackerel. Take a look at gold just getting shot out of a cannon here over the last couple of trading sessions. Of course, those have been the trading sessions since we've seen the Trump tweets regarding tariffs on Mexico in addition to China. And so a little bit more chaos in the market right now. Sometimes chaos will then lead investors and traders over to a relative safe haven, or at least a perceived safe haven of gold. And so gold is that beneficiary right now, and you'll see that the US dollar is starting to break down over that exact same time period. So notice that the last two trading sessions, the dollar has fallen. In fact, we're now trading below that 30-day moving average on UUP. And the last two trading sessions that the dollar has fallen, gold has spiked nicely higher. And actually, just like that, gold is at its 3-month highs. Think about that for a second, because, about a week ago, we were close to touching 3-month lows on gold. And here we are a week later with the right set of geopolitical news, and gold has all of a sudden exploded higher. So keep some of those gold mining stocks on your radar. I know one that has been really hot here has been KL. That's not quite as well known of a gold stock as perhaps NEM, which is Newmont Gold Corp, or even GOLD, which is the new Barrick Gold. But anyway, KL has been a stock that's been breaking out here recently, so keep your eyes on that one. Some of the other movers today, we did see TLT taking a big move higher. Notice that TLT has been in basically a straight line shot to the shot to the moon here over the last couple of weeks. And so this is not new news. It's a continuation of the news that we've already been giving you. And of course, as that's been happening, the exact opposite is taking place with yields themselves. Remember, bond prices and yields move inversely to one another. So when you're looking at these two charts right here, TNX has been plunging, TLT has been going up in a straight line. Notice all of those oversold cluster signals that are starting to show up on TNX, so it'll be interesting to see if we get any sort of a reversion to the mean move there, but right now it's not necessarily looking that way. It's like this market wants to seek out safety, and in doing so, it's finding safety in U.S. government bonds, it's finding safety in gold, it's finding safety in foreign bonds. If you were to take it to the sector basis, we'll talk about that here in a little bit, but areas like utilities are the strongest areas from a sector perspective, so the market's seeking safety there as well. So this is not a market that's going out of its way to entertain the notion of risky assets. So it's kind of interesting, but nonetheless something that we want to keep our eye on, because remember, the interest rate environment does tend to impact other areas out there, like those utilities that I mentioned before. Usually when interest rates are falling, utilities and REITs are holding up reasonably well. It's one of our conversations that we had in my top-down trend trading class earlier today. The VIX was up a little bit today, not a whole lot, but it's well off of its lows from about a week or so ago. So, a little bit of an upward trajectory there out of the VIX as well. Although we don't want to get overly excited about it, VIX is still below 20, but nonetheless, it's well off the lows of the previous few months that we've been dealing with. Another thing that I found interesting is junk bonds. Now, this is a relationship that I've mentioned to you guys in the past. A lot of people have wrongfully just lumped junk bonds in with other types of bonds. And you might be wondering, well, why in the world is the U.S. government bonds going up? Why are foreign bonds going up? Yet junk bonds are falling off of a cliff, and we have oversold cluster signals on junk bonds. Well, some of you that have been in my classes and presentations in the past know that there is a very strong correlation between junk bonds and crude oil prices right now, because a lot of the corporate junk world is made up of energy stocks that were on the brink here a few years ago that needed to raise capital in a hurry and had to do it at very expensive rates as a result of their low credit ratings. And so a lot of the junk bond world right now is made up of some of those lower tiered energy players out there. And with crude oil falling off of a cliff here in recent weeks, that has really put a lot more stress on the corporate bond market again. So we'll see if that can revert. We do have some oversold cluster signals finally that have showed up on crude oil here after that particular area of the market has really been hit pretty hard here in recent weeks. Let's go ahead and take a look at our next 12 grid setup, and this will be our foreign stock markets 12 grid. So this will be chart 4F for those of you that want to follow along at home. And again, if you're looking for the market forecast technical indicator, so as an example over here, you might be thinking to yourself, well, geez, I'm looking at the FXI chart and I see a couple of green dots on the chart that are telling me that I have an oversold cluster signal, but I don't actually see the market forecast itself. Remember, you can right click on the chart, go to maximize sell, and then down below is where you see the actual market forecast technical indicator to confirm. For example, there are the two cluster signals right there and right there. So anyway, just a friendly reminder of how to get the most out of your charting package here. So as we're looking at these different foreign stock markets here, you can see we've got 4 green charts on the board. We've got EWZ, which is Brazil. We've got Russia that actually broke out, interestingly enough, to 3-month highs today. I guess I would not have been expecting that because a lot of times Russia is a little bit more correlated to oil markets as well, considering some of their biggest companies like Lukoil and a few of those others over there are oftentimes in the oil patch. But nonetheless, Russia had an interesting breakout there today. We did have India hit new highs here today as well. I noticed that there was an Indian banking company, HDB, that does trade here in the United States that has been in a pretty nice uptrend here recently. So perhaps you can put that one on your radar screen. Again, that's HDB. And then we have South Africa. That's down in the lower right-hand corner. Now notice with South Africa, we are below a falling moving average. That's why that moving average color is red right now. So despite us having a bullish posture, according to the market forecast intermediate line, it's got a little bit of a challenge in front of it if it wants to get up and through that downtrending moving average there. Whereas those other 3 up at the top, Brazil, Russia, and India, they're already trading above their moving averages. So they've already kind of been in their upward move here for a longer period of time than South Africa. So be a little bit more leery about that. You know, when it comes down to your position sizing and different things like that, you might just apply a slightly smaller position size to something like South Africa if you don't have all the stars aligned together. Otherwise, a lot of those other charts continue to struggle, much like so many sectors in the United States have struggled. We do have an oversold cluster signal on Israel yet again today. That's the 3rd straight session. We've had oversold cluster signals on Israel, and we haven't had any response to that yet. So maybe we will, maybe we won't. But what we do know is things have gotten pretty ugly and out of control there to the downside in terms of selling. And so we'll have to see if we can find a little bit of stabilization in Israel in coming weeks. Let's take a look now at our U.S. sectors 12 grid. All right, so as we're looking at this, you can see it's a clean sweep across the board for the bears in this case. Remember, those pink charts tell us that they have bearish postures. And so right now, we actually don't have any of the sectors that would be considered to have bullish postures according to the market forecast intermediate line. Now, a few of the sectors do look better than others, as it will always be the case. And among those, I would say that utilities and REITs are a couple of the better looking ones out there. Notice that XLU had a nice bounce off of that rising moving average down below there. And so if I were to right click on that and go to maximize sell, kind of see what that looks like in a little bit better view right there. So that's a decent bounce. We'll want to keep our eye on that, but a lot of that is contingent upon interest rates continuing to fall. So, there are no guarantees that's going to be the case either. And then if I were to use this arrow to go to the right up here, that will then take me to the next chart, which is XLRE, which is the sector fund that kind of tracks the real estate stocks in the S&P 500. And you can see, again, we have a nice bounce off of that rising moving average there. Maybe not quite as much of an upward tilt as the utilities, but nonetheless, fairly strong price action on a relative basis. So while a lot of these other charts are falling off of a cliff, at least there's a couple of them trading above their moving averages there. We do have an oversold cluster here today on the discretionary stocks, so be aware of that as well. The materials had a really nice day. They were up about 3% today. I did see that Dow DuPont had their kind of final spin-off that, they've been going through reorganizations here for the last couple of years. And so I don't know if that impacted things there today or not. But that was a really nice move out of materials, kind of out of nowhere. Look at that candle in relationship to all these other candles on the board for materials. That was the biggest one by far on the board to the upside. So we'll see if that can start changing the trajectory for some of those materials companies. I'll probably be talking about material stocks tomorrow in my dividend growth investing class for those of you that are interested in that sort of thing. Notice up here at the top, the communications area really got hit today. Now that's what I was mentioning before. Remember that Google and Facebook are technically considered communication stocks now. So XLC, no surprise at all to see it being the worst performer today. It was down over 3% from a sector perspective. It does have an oversold cluster signal today, but who knows if this drumbeat of regulations against the Facebooks and the Googles of the world will continue. If it does, then they're going to have a hard time kind of pulling out of that position right there. On the other hand, if some brokers come out and upgrade a couple of those internet players saying, hey, it's a little bit too far, too fast to the downside, then maybe we can get a little reversion to the mean. But you can see that communication stocks now touched a 3-month low here as of today based upon some of that news. You'll also see that technology struggled today. It also has a oversold cluster signal, and I mentioned many of those stocks like your Microsofts and your PayPals out there that struggled right along with some of those big internet players. Let's go ahead and have a conversation over on the internet now. First of all, thank you to everybody who clicks like and retweet on the Market Outlook videos. I was a bit disappointed this last time. So the last time I did the video, only 83 of you clicked like. So I take it from that. I've got to do a little bit of a better job. As I mentioned in that video, my bogey whenever we're doing this is 100 likes on Twitter. It's really easy for you guys to do. It only takes 5 seconds for you. Remember, it takes David and I 2 to 3 hours to produce these videos, do the editing, the uploading, the notifications, the sending of the emails, and all this stuff. So we have to ask ourselves, is it worth our time and effort to do these videos on a daily basis? If you guys can click that helps a lot. Now, as an example, today is Monday. Typically, I don't do the Market Outlook videos on Mondays because I'm teaching 2 different premium classes on Mondays. I teach my top-down trend trading class in the morning, then in the afternoon, I'm teaching my options for long-term investors class. So this is a triple header for me today, and you can imagine my motivation at the end of a long day like this to do a free video that's going to take up another 2 to 3 hours of my time. That can be a question mark if I get the sense that people are not appreciating the videos themselves. And so again, we try to ask you this regularly. Please get into the habit of clicking like on Twitter if you get value out of these. So that way it's an easy decision for us to come to you on a daily basis and do these free videos for you. So if you get value out of them, click like. If you don't get value out of them, don't do anything, and we'll get the message there as well, and then we'll change our plans in the future as well. So anyway, can't say we didn't warn you. We try to ask you to do this every single day. All right, other things to be aware of. On the blog, earlier today, one thing I wanted to point out when I produced the 9 at 9 this morning, Cypress Semiconductor did have a big buyout offer here today from an Infineon, which was a German company, I believe. And so you can see Cypress Semiconductor was up 26% today. So that was pretty interesting. We also saw some news out of ASCO, the big medical conference that's taking place. So I noticed Amgen was up. We also see Humana was up in the pre-market right there. We even saw before today's big beatdown in some of those communication stocks, notice that Google was already on the board at the 9 at 9. So remember, I produce this 9 at 9 every morning at 9 a.m. Eastern time, which is a half an hour before the stock market opens up, to give you guys a heads up if you're trading that day, which stocks you should expect to be up and which stocks you should expect to be down ahead of time. So that way, if it impacts your trade, you're not caught off guard like a deer in the headlights, and you can kind of trade off of that information. With Google being down pre-market, you might have put on a bearish trade on it, or perhaps one of its competitors like a Facebook or Amazon or what have you, and maybe could have had a decent little move off of that, as just one example. Also, over the weekend, I did produce the weekly dividend increases blog post. So for those of you that are dividend growth investors, feel free to check out some of those stocks there that have been raising their dividends here more recently. And then also produce the sector selector on Friday night. And if you want to see that sector selector a little bit bigger, here is that view. You can see what I mentioned before, which is utilities, real estate, were number 1 and number 2 for the second straight week. And again, a lot of that is their relationship to interest rate movements. If interest rates are going down, like we've basically seen with what I showed you earlier with TNX, basically going down every day for the last couple of weeks, that really helps put the wind in the sails of utilities and real estate stocks. So earlier today in my top-down trend trading class, we're looking for stocks that have 3 green arrows that are in significant uptrends and also belong to some of the strongest sectors out there. We do use this graphic to our advantage. So anyway, lots of good stuff coming your way. For those of you that get value out of all that, make sure you're clicking like on Twitter. All right, let's go ahead and now talk about our trade application example for today. I'm going to come back on over here to chart 4A. And as I pull this up here, I'm going to take a look at a ticker symbol that many of you probably are not that familiar with. And that ticker symbol is ACGL. This is Arch Capital Group. And this is a stock that many of you have probably never heard of before. It's not the the Travelers or the Chubbs or the Allstates or the Aflacs of the world, trying to think of other big insurance companies out there. So it's not maybe one of the first insurance names that you think of, but insurance companies have actually held up reasonably well. Some of you saw me chatting back and forth with Ian on Twitter a few weeks ago about that. That seems to be one of the pockets of strength in the market for whatever strange reasons. Those insurance and reinsurance companies have retained their value nicely. Well, you can see here that Arch Capital hit a 3-month high here today. If you keep on going back in time, let's go back a year instead of 3 months. And you can see we hit a 1-year high today. If you go back 5 years, you can see we hit a 5-year high today. If you go back 10 years, that's a 10-year high. And 20 years, that's a 20-year high. So while the stock market has felt awfully heavy here recently, there are a few stocks that are bucking the trend. Another thing that I posted on Twitter tonight was that all of a sudden Coca-Cola is in a nice uptrend, a stock that we talk about a lot in my dividend-oriented classes. Notice that Coca-Cola all of a sudden hitting 3-month highs here as well. So sometimes you have to go looking towards some of these more boring areas of the market when the stock market gets chaotic. And you would certainly say that insurance companies are about the most boring of the boring out there. So ACGL, we're going to keep it nice and simple on tonight's trade idea. We're not going to do options because this is not going to be a very liquid security that's out there, at least in comparison to your AIGs of the world and your Allstates and what have you. So we're just going to stick with a stock-based trade here. This will be more of a trend trade type of an idea. And all we're going to do is we're going to buy 100 shares of this, and we're going to put a $2 per share trail stop on it. You'll notice that if we buy this around 35 bucks, which is where this thing closed here tonight, and we put a $2 stop loss on it, that would currently take our stop loss down here to about $33. That would give us plenty of a room there to be wrong, have an awfully wide net that we can cast without getting kind of nicked out of our trade, and still allow us a decent chance of continued upside momentum in a stock that's literally hitting all-time highs here today in the face of a very ugly stock market otherwise. So in order to place that trade, I'm just going to come up here on the chart itself. I'm going to right click. I'm going to go to, let's see, how about buy custom with stop right there. That middle option. Click on that. That loads our trade up down below. Now, of course, you can adjust your quantity to position size, whatever is appropriate for your size account. We're just going to leave the default in there with the 100 shares. And if we go ahead and do this trade, I'll leave it in there as a limit day order. That'll put it in there as of tomorrow, and it'll try to get filled at 34.96. And then the stop order down below here, the second line, go ahead and click on that drop down and choose trail stop instead. To the right of that is day. I'm going to change that to good till cancel, because that's basically saying keep that trail stop on there after the first day of trading. Keep it on there for every day until you decide to cancel it. And then finally, down below here on that third line where it says plus and minus, click that once, click it again. Percentage. Actually, you probably wouldn't have needed to click it. The plus and I was thinking there was going to be a dollar sign in there, but the plus minus is probably talking about dollars and cents. So we're going to actually just leave it at plus minus right there. And we're going to put in 2.00. So in other words, $2 in our trailing stop that we're going to use in this particular case. So let me go ahead and then click confirm here. Read this one more time where we're buying 100 shares of ACGL at $34.96. And then our sell order is going to have a trail stop on that, which is the mark price or the current price minus $2, good till canceled, triggered by number 1. So in other words, this second part of the order will not go in until the first order is triggered or executed there. So with that, I'll go ahead and send that one in, and we'll see if we can get filled first thing in the morning. Thank you once again for joining me here tonight. I'll actually be with you the next couple of nights as David has a few things going on. So as always, if you get value out of these videos, go over to Twitter, click like. It'll be pinned to the top of my timeline there. But remember, we continue to have bearish postures on the major markets out there, although there are some interesting areas like insurance stocks, like some boring consumer staple stocks, and even some gold stocks that are starting to come to life. So keep your eyes on those as well. So with that, have yourself a great rest of the night. Take care. Bye-bye.